basically. Yeah. Zone 3?
I'm Tim Medley from Jackson, Mississippi. Last year, the question was asked about your preference for purchasing entire businesses versus parts of public companies. You mentioned you preferred to buy private businesses because of the tax advantages and your attraction to the people in those businesses. Are you finding today that there are better purchases within the private market versus in the public securities markets?
Well, I would answer that no. We very seldom find something to buy on a negotiated basis for an entire business. We have certain size requirements, big limiting factors. It has to be something we can understand. I mean, that eliminates 95% of the businesses, and we don't pay any attention to them, but we get lots of proposals for things that are just totally outside the boundaries of what we've already said we're interested in. We prefer to buy entire businesses or 80% or greater interest in businesses, partly for the tax reasons you mentioned, and frankly, we like it better. It's the kind of business we would like to build if we had our absolute druthers on it. Counter to that is we can usually get more for our money in wonderful businesses in terms of buying little pieces of them in the market, because the market is far more inefficient in pricing businesses than is the negotiated market. You're not going to buy any bargains, and I mean you shouldn't even approach the idea of buying a bargain in a negotiated purchase. You want to buy it from people who are going to run it for you. You want to buy it from people who are intelligent enough to price their business properly, and they are. I mean, that's the way things are. The market does not do that. The market, in the stock market, you get a chance to buy businesses at foolish prices, and that is why we end up with a lot of money in marketable securities. If we absolutely had our choice, we would own we would own 3 times the number of businesses we own outright. We're unlikely to get that opportunity over time, but periodically we'll get the chance to find something that fits our tests, and in between we will, when the market offers us the right prices, we will buy more, either businesses we already own pieces of, or we'll buy 1 or 2 new ones. Something's usually going on. There are tax advantages to owning all of them, but that's more than offset by the fact that you'll never get a chance to buy you'll never get a chance to buy the whole Coca-Cola company or the whole Gillette company. The businesses like that, the sensational businesses, are just not available. Sometimes you get a chance to make a sensible purchase in the market of such businesses. Charlie?
Well, I think that's exactly right. And if you stop to think about it, if 100% of a business is for sale, you've got the average corporate buyer is being run by people who have the mindset of people buying with somebody else's money, and we have the mindset of people buying with our own money. And there's also a class of buyers for 100% of businesses who are basically able and shrewd financial promoters. I'm talking about the leveraged buyout funds and so on. And those people tend to have the upside but not the downside in the private arrangements they've made with their investors. And naturally, they tend to be somewhat optimistic. And so we have formidable competition when we try and buy 100% of businesses.
Most managers are better off in terms of their personal equation if they're running something larger. Now, they're also better off if they're running something larger and more profitable. But the first condition alone will usually leave them better off. We're only better off if we're running something that's more profitable. We also like it if it's larger too. But our equation actually, our personal equation is actually different than a great many managers in that respect. Even if that didn't operate, I think most managers psychically would enjoy running something larger. And if you can pay for it with other people's money, I mean, that gets pretty attractive. How much would and let's just say you're a baseball fan. Well, how much would you pay to own whatever your hometown, the Yankees? You might pay more if you were writing a check on someone else's bank account than if you were writing it on your own. It's been known to happen. And in corporate America, animal spirits are there, and those are our competitors on buying entire businesses. In terms of buying securities, most managers don't even think about it. It's very interesting to me because they'll say that they'll have somebody else manage their money in terms of a portfolio of securities. Well, all that is a portfolio of businesses. And I'll say, well, why don't you pick out your own portfolio? They'll say, that's much too difficult. And then some guy will come along with some business that they never heard of a week before and give them some figures and a few projections, and the guy thinks he knows enough to buy that business. It's very puzzling to me sometimes.